Hello, welcome back dear students. Today we will be discussing about control accounts. See, there are two types of accounts for customers and for suppliers. Individual accounts for customers such as Mr. A's account, Mr. B or Mr. C. They are in a sales ledger. Now what is a sale ledger? Sale ledger is a book containing T account for customers. Then we have another book with the name of purchase ledger. Purchase ledger consists of T accounts for suppliers. That is Mr. X, Mr. Y and Mr. C. Now, having said that, accounts for debtors and creditors individually. If the business grows in size as the number of customers and suppliers grow, we need to have some check and balance on these ledgers. So to make sure that there are no errors or fraud that may be occurring in an account, we make collective or combined account for debtors and creditors. A collective account for all debtors is known as sales ledger. In the short form, we say it as SLCA. So SLCA is an account for all debtors combined. And now we have two sets of account. Individual accounts are in a sales ledger for customers and for purchases ledger for suppliers. Combined account for sales ledger and sales ledger control account is in general ledger. General ledger is the book containing all accounts, T accounts, including sales, purchases, return inwards, return outwards, as such as liability, expense, income, blah blah blah. So sales ledger consists of individual account for customers. So this is in order to keep a check that there is no error in the account or fraud can be minimized or managed. We make a sales ledger account. Therefore, we make a sales ledger account. Now, the sales ledger is a debtor account starting from a balance BD. Starting from balance BD, you are already aware that debtor is an asset for the business customer. Customer is an asset, so opening balance, which is balance BD, is on the debit side. Then balance CD is going to be on the credit side. Balance BD is the opening balance and balance CD is the closing balance. So these are normal balances for any debtor account. Now what is balance BD on credit side? This one. Now what is a balance BD on credit side? This is known as minority balance or abnormal balance. Now what is this minority balance or abnormal balance? See, my dear students, normally the debtor is an asset, means we are asking our debtor owe us money, therefore they are an asset for the business. But there may be a situation that we have to pay to some of our debtors. Why do we need to pay to our debtors? There are some reasons, there are so many reasons behind this. Now, it can be due to over or duplicated payment by the customer, which means our customer has paid more than we owe, or he or she owes us So she owes, let's suppose, 1,000, and she has paid 1,200. Now we have to return 200 to him. This is known as minority balance, or she or he has given us. Duplicate payment means by mistake he has given us 1,000 two times. Now we have to return back 1,000, therefore it is known as minority balance. Secondly, a customer has bought goods from us on credit. Then for some reason he has returned the goods to us, but he has already paid the money for these goods. But now what we need to do, we need to pay back the money that is our minority balance. Thirdly, the customer has paid us advance. Please listen to this carefully. Thirdly, the customer has paid us in advance but has not yet bought the goods, and now he decided not to buy from us, so now he is asking for a refund. Therefore, this is a minority balance. If there is minority balance, it will come on credit side. And because it is the liability for the business, the minority opening balance comes on credit side. And closing balance comes on debit side. In a debtor account, the normal balances on the debit and credit sides are always there. But on the other hand, minority balance can be there or it can't be there. The example is the same, that we are living in Pakistan. So Pakistan is a Muslim state. Therefore, in every city there must be a Muslim because it is a Muslim state. It can be that in some state there are non-Muslims, minorities, or there must be some cities there are no minorities. So minorities can be there or cannot be there, but majorities will always be there. So this is an example for minority balance. I hope you like my video, and do keep in touch for more detailed information about control accounts. Thank you for watching.